What's going on, guys? It's going to be our summary of markets week 59. Then we're going to get into our options watch list right after that. So starting off with SPY, we had a pretty nasty pullback for the last 3 days of the week last week, but this was all part of the plan. I told you guys that it was most likely going to be a pullback week, most likely going to be chop. We had the quad witching. Basically, just all the indexes looked like they needed some kind of pullback or consolidation. So it wasn't really out of the ordinary to see a pullback there. For SPY, this pullback is actually coming right back to support. You're hitting the OTS trail, giving a buy signal. You're putting in the head of what looks like a bulldog. So you have a little bulldog pattern here, which if you guys don't follow my channel, that is a double bottom with a curved back, pop up into a small pullback. So you have that pullback putting in the head of the bulldog. We did retrace below the back, which is a little slightly less bullish. But it still looks very good as long as it doesn't go any lower. So I'd say as long as SPY holds above this OTS trail around 387, 386, I think this is very bullish. A couple things that worry me here. One was, like I said, you're below the back. Two, the Momo is giving a bearish pinch where the trend line, which is the long-term momentum, and the histogram, which is the short-term momentum, they're both consolidating and pushing lower. So that's what we call a Momo pinch. Those are typically very bearish. So if this continues to pinch like this for another like 1 or 2 bars, so 1 or 2 days, that's going to be very scary. Typically, the pinches are a very, very high strike rate for that direction that they are pinching into. And you typically do not want to trade against that direction. So if the pinch is downward, you really want to try to avoid trading bullishly. So that's a little scary. If that is confirmed for, like, say, Monday or Tuesday, that's going to be a little worrying. We're also gray on the OTS, which indicates that we are kind of shifting our trend here. So what I want to see on Monday and Tuesday is I want to see a strong bounce. I don't want to see consolidation. I don't want to see like a pullback and then a consolidation. I want to see a straight up bounce, like immediate buy pressure coming in. I would be okay with like it opening up and then selling off a little bit and then recovering. That would still be okay. But I really need to see strong buy pressure on Monday, and I want to see a follow through on Tuesday. So we want to see this get above like 391.50, 392 as soon as possible. I want to see that break before Tuesday. So if it's like Wednesday or Thursday and we're still not above like 392, that is going to be very sketchy for me, and I will feel like we are definitely shifting into a small pullback or a downtrend. Okay, so very strong buy pressure I want to see on Monday or Tuesday. If not, most likely will be bearish. Now the targets that I'm looking for are around 396 and 399 to 400. Okay, if it does fail, watch for support around that pivot around 380. All right, moving on to gold. Still continuing this downtrend that we've been in for a very long time now. It's looking like it wants to bounce a little bit. You are bouncing a little preemptively off this support around 1675. But it does look like it's sustaining that bounce so far. You are turning green on the OTS. You do have some short-term momentum coming in. The long-term momentum is also kind of creeping up here. So if we see a continuation of this momentum into Monday, Tuesday, Wednesday, this should actually turn into a little trend reversal here. So right now, it kind of looks like a dead cat bounce, maybe like just a little small relief and then a continuation lower. But if we do see that continuation on Monday, Tuesday, Wednesday, kind of a push up here, then I think this is kind of a shift in momentum. We don't want to see this get back below, I'd say, like 1720. Anything below like 1720, breaking this little consolidation, that would be pretty bearish. So as long as you stay above that level, I would look for around 1770, and then a lot of resistance around that high 1700 area. I would not be bullish on this until you finally break out of this massive downtrend. So we need gold to get back above like 1820, 1840 before we can be long-term bullish. Moving on to oil. Oil finally had a pullback on the daily. We have not seen a red OTS bar since November. So basically, once that pivot got put in November, we had that little retest, flipped green, and we've just been running the entire time since then. So we're finally seeing a deep pullback. It's finally coming back to retest that 50-day moving average, but it held beautifully. So you had a massive bear divergence here, which I think I called out in the last video. So that little bear div there kind of pulling back, you did play out. So that target has been hit. All of your bear div targets are hit. So we can't use that as our reason to go lower. So I think that this has already played out. And as long as we see continuation on Monday or and Tuesday of this bounce, I think oil continues higher. Now, we do need to see that short-term momentum quickly reclaim zero, bounce up higher. We also need to see a reclaim of the OTS trail. We also need to see a reclaim of that 64 resistance. Okay. If all of those things are reclaimed, I would be looking for around 70 to 71.50 as your upper targets. Moving on to Bitcoin here, we still are waiting for our final target of our longer-term Fibonacci target to be hit around 63,000. We have not hit that, just barely missed it. And then if you look at the short-term fib, it's kind of a little messy here. Like I can delete this real quick just so you can see it. This is our short-term impulse. So we want to get above like 61.3 to get to around 69 or 71. Okay, so those are your upper targets if we do break out. Now, it does look like we are topping out a little bit here, but it still looks pretty bullish. You are losing some short-term momentum. The long-term momentum is still pretty steady, but as long as you're above the OTS trail, as long as you're above, I'd say like 54,000, you look like you want to continue higher. This could be like a very ugly cup and handle. So it could be a little cup and then a handle. So as long as we break above that 62,000, 63,000, we should be impulsing higher into those high 60s. Okay. If it does not play out like a cup and handle and you do break below those supports, watch for the 50-day moving average around 50,000. And then there's a ton of support kind of around this previous high little SR flip here. So anywhere from like 44 to 48 is very strong long-term support. Okay, so if you're looking to buy the dip on something long-term on Bitcoin, that is your strongest support moving forward, that little SR flip there. Same thing with Ethereum. It's kind of putting in a cup and handle. This is a cleaner cup and handle than Bitcoin, actually. So this is a bullish continuation pattern. We do see gray candles here on the OTS, which kind of indicates that the buyers are not really strong here. The sellers are not very strong. It's just a kind of a sideways battle, a consolidation, which is pretty indicative of a cup and handle. So as long as you break above this handle, get above, I'd say like 2,000, you should be impulsing higher into around 2250 to 2400. So keep an eye on that. If it does want to break lower, strong volume comes in, look for the OTS trail around 1700, and then you do have a pivot around 1580. The momentum is not really giving you a direction short-term or long-term here, but they are slowly starting to climb. So if this momentum gets into that kind of 10 to 15 area, and then you have that short-term momentum climbing as well, I would say you're very easily going to hit that upper target. But all right, that is the summary of markets. Let's move on to the options watch list. Now, a couple things I wanted to note before we moved on to the actual watch list. Looking at ES, which is the S&P 500 futures, had a incredibly bullish bounce on Friday. Now, it looked ugly, right? You had that nasty sell-off, but look at what we did. So we have this really ugly kind of broadening bearish wedge here that we finally broke out of when that stimulus news passed, and then we came back to retest it, and it bounced off that wedge perfectly. Okay, we also have a monthly VWAP and a ton of support around kind of 38.70, which is acting as strong support moving forward. So as long as we hold on to that monthly VWAP around 38.70, I would say this is a bullish retest, and we should see a higher price. Now, another thing was I told you guys in Discord to be prepared for this inverse head and shoulders to be put in. It was going to be a nasty week, either choppy or bearish. Very unlikely to see a bullish week, as I told you guys last week. And that's basically what happened. We had that right shoulder being put in on the NASDAQ and the Qs. So the futures had a nasty sell-off here into kind of that right shoulder formation where we have that left shoulder support, and we held beautifully. If you look at the Qs, I told you guys that we did not want to see price holding below 311 or 310. 310 was like the lowest I wanted to see it go. And what was the low? The low was 309.66. So it just barely broke 310 and quickly wicked. So not only was that the right shoulder of the inverse head and shoulders, that is also an anchored VWAP from this previous low back in November. So another thing that I showed you guys is if you take a price fractal from this September inverse head and shoulders, we are almost identical to that price fractal. Okay, so what it looks like we're going to do, and funny enough, even before that inverse head and shoulders, look at what we did. Same exact thing, pushing an all-time high and then selling off. But what it looks like we're going to do is we're going to push out of this inverse head and shoulders, try to put in an all-time high, and then it might fail there to put in a new low. But that low is actually going to be a bullish retest, and then it's going to run. Now, I'm not a huge fan of price fractals. I don't like using them too much in my trading, but this one is just too obvious to kind of pass up. Now, what I would say is I think that this is going to definitely push higher if this right shoulder holds. You're going to hit that monthly VWAP, and now that is going to be the biggest signal if this is going to continue or not. If this can get back above the monthly VWAP, then we will easily try to retest towards the all-time high. If it cannot break that neckline, that VWAP, then we are going to go lower, and this price fractal is going to break. Okay, so I would not rely too heavily on this price fractal. I would wait for confirmation right around VWAP. Another funny thing about that price fractal, look at the VWAP. Same thing. You had that VWAP being the neckline just as you see it here. So, like I said, just as you did back here, wait for that confirmation of that break of VWAP. Then the growth stocks and the tech stocks will start pumping. But all right, with that said, let's take a look at some things that I have on my watch list here. So I was still watching FedEx. You hit our target around 272, and then you pulled back. I don't play earnings, but it did have very good earnings. You popped up, and you hit the VWAP targets. If it can hold above these VWAPs, very likely we'll go into that 300 high fairly soon. Now, FedEx is not a very quick mover, so I wouldn't be taking anything too short-term on that. But FedEx was running really hard on their earnings, and then also UPS was running on FedEx earnings. So the sector looks pretty good. So as long as you hold above that gap and you hold above VWAP, it should continue higher. Another one that I'm keeping an eye on is IFRA. It is a infrastructure ETF. We had Biden talking about an infrastructure bill, but I wouldn't get your hopes up too much because we've had basically every single president for the past like 6 presidents talking about like a massive infrastructure bill, which they never really pushed forward. So don't get your hopes up too much, but every time they talk about this infrastructure bill, it should help the infrastructure stocks and ETFs. So this would be kind of like a blue chip, slow mover play, but as long as it stays above VWAP around 32, I think this continues higher. Another infrastructure play would be steel. So steel has kind of a cup and handle here, where if you stay above like 2130, 22, it should be very strong. So we're putting in kind of the cup here, and now we're slowly putting in that choppy handle. So maybe a little bit more chop, but once you start to climb and kind of hold that price, you should be pushing higher into around 26 to 27. Okay, so keep an eye on steel. As long as you stay above like 2050 to 21, I think this is a very bullish consolidation. Another name that was getting a lot of momentum last week was United Health. This is the #1 holding of the Dow Jones. So if you guys watched the Dow Jones last week, the Dow Jones has been absolutely tearing. It's been basically leading the market. And we typically see this when growth stocks see a pullback. Okay, so typically when people are extremely bullish on like the tech sector, the growth stocks will do very well. If that momentum starts to come out of the growth sector, out of the tech sector, it typically runs into the Dow Jones and like the blue chips, the big names in the industrials, the financials, stuff like that, the safer plays. So we're seeing a lot of momentum coming out of the Qs, pulling back, and then we're seeing that money flow directly into the Dow Jones. Okay, so look at the top holdings of Dow Jones. And what I was actually surprised to look at, I saw that they're very heavily weighted in financials now. So it's not so much just the industrial average that it used to be. They are very, very heavily weighted in financials. So when XLF does very well, that's the financial sector, the Dow Jones and the other holdings in the Dow Jones typically do fairly well. So keep an eye on the Dow Jones holdings. This is the number one holding. So if the Dow Jones keeps continuing higher, this stock will continue higher as well. Another one I'm watching is the XLE. This is the energy ETF, the sector ETF. So as we talked about with oil, I think that pullback on oil is pretty bullish. So as long as, like I said with CL, if my plan plays out with CL, then the energy sector will follow crude oil basically spot on. So keep an eye on CL, keep an eye on the crude oil futures. If crude oil continues higher, this energy sector will do well. I have a couple of value ETFs here. If you guys are heavily weighted in like growth stocks in your portfolio and you are looking for something to diversify your portfolio, keep an eye on these value ETFs, IWD, IVE, and VONV. They typically follow the Dow Jones because, as I said, most of those companies are value companies. They are not like high growth tech names. So typically when you have value ETFs, they will follow the Dow Jones the closest. So as long as Dow Jones continues higher, these value ETFs will also do fairly well. So if you guys are looking for something to diversify, keep an eye on those. Snapchat is one of the growth companies that I am still keeping an eye on. I want to see this hold above VWAP above 63, and then you'll quickly push into that high around 70 to 74, and I think you push in all-time highs fairly easy if you can hold above VWAP. So keep an eye on that. You do have earnings coming up fairly soon, too. Another one that I'm keeping an eye on is Jets. This is the airline kind of travel ETF. With the vaccine being pushed forward in the U.S. fairly quickly, we're seeing a lot of good news in the travel sector. So I think as long as that vaccine news stays positive, obviously we're basically lifting all of the lockdowns in the U.S. They were even talking about lifting the travel restrictions, but that is kind of up to the other countries as well. It can't just be the U.S. lifting the restrictions. We have to have Europe, which are not doing very well with COVID. So once Europe catches up to kind of how the U.S. is doing, those travel restrictions should be lifted, and these travel ETFs, these travel stocks, they should do very well. So if you're looking for a kind of a higher risk, it's kind of similar to the growth sector, keep an eye on Jets. I think Jets continues into the 30 range, maybe even to around like 32, 34. You do have a lot of support around 26 to 25 if you want to be a little bit more passive and wait for a buy the dip. Another growth name that I'm keeping an eye on is NEO. NEO is putting in that inverse head and shoulders, basically like every single growth stock out there. If NEO can break above its neckline, above like 45, I think you can quickly get to around 48. And then the main target on that would be around 54 to 55. Now, we're not going to be too bullish until you reclaim that 55 VWAP. So make sure you're watching the volume. If the volume steps up here, breaks that neckline, keep an eye on 55. CCL, same thing that I just said about Jets. That's the same thought process that I have on CCL. One slight thing you got to worry about on CCL is the earnings. Now, the earnings is really weird on these cruise line companies because it's like we know they're going to be horrible, right? We know that no one's been cruising. We know their earnings are going to be awful. But are they going to be as bad as we think they're going to be, right? It's not, are their earnings bad? We know they're going to be bad. How bad are they going to be? So if they're not that bad and they're not as bad as expected, CCL will still go up. Even though they have not been cruising, they have no revenue, they're bleeding money, they can still go up even with bad earnings. So just keep that in mind. I don't play earnings, you guys know that, but after earnings, depending on how CCL looks, if it dumps down to like 22, 21, anywhere around that 20 range, I will be looking to sell some cash covered puts to collect some premium short term and be bullish on CCL long term. I think the cruise lines have a massive, massive potential to run really hard later this year. So for a longer term trade, I told you guys last year, what did I tell you? One of the biggest sectors into the first quarter of 2021 was going to be the travel stocks, the cruise lines, the airlines, the hotels, stuff like that, right? I think they are also going to have another boom in Q4. So later in the year, when these cruises start coming back, I think a lot of people are like, oh, nobody's going to go cruising. Nobody's going to be that stupid, right? The cruise people don't care. They don't care about the virus, okay? So later in the year, once we see those numbers of people cruising, I think they're going to be a lot better than people expect, okay? As long as they don't go into the route where you have to have a vaccine to get on a cruise, I think if they start pushing that, then their numbers might get hurt a little bit. If they don't force people to have a vaccine to go on a cruise, I think the cruise lines have an excellent year in Q3, Q4. Okay, so keep an eye on that for more of a long-term play. Another company that I'm looking at selling puts on basically during any big sell-off is Ford. The thing about Ford is it's probably not going to give us a big sell-off because these old companies, these blue chips, they are doing pretty damn good. Okay, so most likely not going to get a pullback below like $11.50, $11 on Ford. But if it stays around, say, $12, I might sell some cash covered puts here and then look for like a $14 to $15 target. But I think Ford continues higher. I think any pullback to around $11 to $10 mid to long term is a very good play on Ford. Now, my number one holding right now is PLTR by far. I have a very big chunk of my account in PLTR. What I'm doing with PLTR is I'm selling a bunch of cash covered puts. So if you guys don't know what that is, I'm selling puts on PLTR, which is bullish, and I'm collecting premium short term. I'm selling them cash covered, meaning I'm selling them naked, and if they get assigned, I have to buy 100 shares per contract that I am selling. So I'm selling basically every single week. And we've already had 2 weeks expire at 100% profit. So we've already collected 100% profit for the past 2 weeks on our PLTR play. I have, I believe this week, I think I have some puts expiring this week as well. I don't have the week after, but I have April 16th. So I'm selling a little bit short term, and I'm selling about 30 days out as well. Now, my thought process on PLTR is to sell the puts around 21, 20, anywhere around that VWAP. As long as we don't lose that VWAP, it is a very safe place to sell puts. Now, if we do lose that VWAP, it's going to become very scary because I most likely will get assigned, but I will start to run a wheel. So if you guys don't know what that is, running a wheel is when you sell puts that are cash covered. If it goes below where you're selling, they get assigned, and then you take that those shares that you got assigned and you sell covered calls. Okay, so as long as it doesn't nuke after breaking 20, I can sell some covered calls and make back some premium. The scary thing about PLTR is it has literally no support from 20 to 15. So if you break 20, there's nothing really holding you up until you get to 15. Okay, so that is a little risky for me to run a wheel around 20. But I'm okay with holding PLTR a little longer than I typically like to hold things. I think PLTR is a very good play mid to long term. You have people like Kathy Wood just buying the hell out of it. She's basically buying every single dip. So as long as she's buying, as long as we have these big hedge funds buying PLTR on basically every opportunity they can get, I'm going to hold PLTR long term. I think it's a good company. I think it's a good play. The chart looks beautiful. You have an inverse head and shoulders. If you break above like 26 and a quarter, very likely could get 28 to 31. Okay. Another company that is a lot riskier because the liquidity is not as good to sell puts on is BIGC. I'm selling cash covered puts at, I think, 45, I believe it is. So I'm selling cash covered puts at 45. So as long as you stay above 45, I make max profit. If we come down to 45, I'll take the shares at 45 and I'll sell some calls above it. What I like about BIGC is you're in a massive falling wedge, and look at the Momo. So every time the Momo has given us a kind of consolidation with a bull div, we've seen a bounce. So consolidation, bull div, bounce. Consolidation, bull div, now we're waiting for that bounce. So it's beautifully holding the bottom of this wedge. If you can break above, I'd say like 60, this very easily gets to around 67 to 72. This is one of my favorite charts. The only thing that's a little scary about this is basically all-time low. So if you don't hold here, it's going to go into price discovery, but it's going to be price discovery bearishly. So it's just going to be leaking until it finds a price that it likes. So a little scary. These other two plays are stuff that I'm just kind of stuck in that I was trading back when growth stocks and SPACs were running. FMAC is my SPAC that I took. This one's really frustrating. It was probably one of my worst trades of the year. We got in this SPAC literally the same day, within like an hour. This thing ripped into the close, and we could have sold this thing for a massive profit if we would have closed it after hours. What I thought was going to happen was I thought the next day it was going to open and go for a secondary run, which typically you see. We didn't get a secondary run, and it just never went back up. So we're basically holding a bag on FMAC. I'll probably cut it pretty soon if we don't see any kind of rumor or news announcement. Another one that I've been dollar cost averaging into is subs. This is a fairly new ETF that is basically an ETF of all the streaming services. So I've been dollar cost averaging into this. I'm basically break even. I think I'm only down like 2 or 3%. So this looks really good as well. Inverse head and shoulders, just like the Qs. So as long as we break out above like 15, this should continue higher. All right, last but not least are all the tech companies. Now, what I'm going to say about all the tech companies is they basically all look exactly the same. All the big tech companies, all the big growth stocks, they're all either consolidating into support or they're putting in an inverse head and shoulders. There's basically no outliers, with an exception of like Facebook, which I'll go over. But what I'll say as like a broad statement, all of the growth stocks are basically at their climax. They're at their breaking point. They have to either have a strong Monday, Tuesday, Wednesday, or they are going to bleed out very heavily. Okay, so if we do not see a strong performance on the growth sector, which is basically just the Qs, just watch the Qs. If we do not see a strong performance out of the Qs for the next 3 days, I would not be trading these high growth names unless you are trading a longer term position like some leaps, or you're trading a theta positive premium position. Okay, I would not be trading weeklies. I would not be trading 2 weeks, 2 weeks out, 3 weeks out. I would not be trading anything under 30 days. In all honesty, I wouldn't really be trading anything below 60 days unless you're selling premium. So just be on the lookout for Qs. If Qs has a strong performance Monday, Tuesday, Wednesday, then you want to look at these tech companies like Microsoft, Apple, Facebook, Netflix, all these big ones, right? So I'll give you some brief levels. If it has a strong week, look for 241 as your main target on Microsoft. For Apple, your main target would be around 127 to 128. For Facebook, this is the only outlier in the big tech. And what did I tell you guys last week and the week before? I told you guys that Facebook looked really strong if you could break out of this bearish downtrend. And I also said if Facebook was to break out and start pushing into all-time highs kind of around 300, this will lead the entire tech sector higher. Okay, so Facebook is a big enough company that other companies will start pushing higher if Facebook goes on an absolute tear, which it looks like it's about to. As long as the Qs don't leak next week, I think Facebook gets to 300. Okay, so watch Facebook 295 to 300. I think that is very possible by Friday if it has a very strong week. So that's my main target on Facebook. The only way you hit that is if Qs does not sell off early. Netflix, the main target you want to look for is around 530 to 541. Amazon, main target you want to look for is around 3200 to 3270. Tesla, main target would be around 712 if you're buying the pullback here. If you want to wait for the actual position, you need to see a break of 712 to break that neckline. Then you're looking for around 770 to around 827. Okay, that is the options watch list. That is the summary of markets. Hopefully you guys enjoyed this video. If you did, hit that like button, and I'll see you guys tomorrow for our live trading session at 9:30 in Discord. Peace out.